I've got 3 minutes after the hour, so I think let's go ahead and get started here this morning. Thank you all for joining us on a nice August day. And a couple announcements sort of before we get started with today's. First of all, we do this webinar series monthly, and our next one will be September 7th at 11 o'clock, and that one is going to be Aaron Muggus, who's the director of the Montana State University Extension's Weatherization Training Center, and he's going to be talking about introduction to OSHA and workplace safety for small businesses. So that'll be September 7th at 11, so mark your calendars for that one if you haven't already done so. The other thing I want to point out, from the same website that you logged in, we do record our sessions, and those are there. So if you missed it or want to share it with a friend or coworker that didn't get a chance to see it, those are available whenever you would like to go back and review those. And I know for today's session, I've had probably 4 or 5 folks reach out that they weren't able to attend live and will be watching that way. So that's fine if you'd like to engage with us in that way as well. Our sponsors for the program are Montana's Small Business Development Network, Montana Department of Commerce, the Small Business Administration, Montana State University Extension, who's my employer, Montana Economic Developers Association, the University of Montana, and Grow Great Falls Economic Development. So a couple of my co-organizers, Jen and Rich, are on as well today. We've jointly kind of planned this, but the only way we can really make this happen is with a lot of our guest presenters. So today we are lucky to have Alyssa Peterman, who is based out of Missoula, Montana, services kind of a regional area, so not just Missoula, and even stretches beyond the Montana borders as well. She works for a company called Mofi, and she is a business development manager. I believe she's been there for a little over 4 years, and she's going to talk to us a little bit about understanding some lender priorities when talking about debt financing for small businesses. So if you'd like, feel free to send in questions for Alyssa anytime during the chat window. I'll try to interrupt and get them in as we go, but then we'll certainly have time at the end where you can ask more questions, or if you would like to unmute and ask questions, you'll be welcome to do so at that time. So with that, Alyssa, I will turn it over to you.
Awesome. Hi, everybody. Thanks for the introduction. I just wanted to share a little bit of information. I have some slides I'll pull up, but just a little background about us, who we are, kind of the things that we see for businesses seeking out financing with us, and maybe why it didn't work in the traditional mainstream for them. And then kind of just walk through products that we offer, and of course, just any sort of discussion that comes up. Happy to pause and redirect. If we want to hit on anything that I'm not covering, just let me know. Open to that. So I'll go ahead and share my screen here. Let's get this going. Everybody see my screen?
We are seeing your screen.
Great. Let's get this. Okay, perfect. I'm gonna actually bounce back here.
And that looks good. And so
you can see that. Great.
Yep.
Awesome. So just a pretty Montana photo there to kick off our meeting here today. I just want to give you a little bit of background for anyone that's not as familiar with us. So like Joel said, we're called Mofi. We are home based here in Missoula, but we do offer business financing support to businesses, individuals, and entrepreneurs who can't get the financing traditionally at a bank or a credit union. And so we focus on kind of a double bottom line, where we look at impact we're making in our communities we serve, but also supporting our organization being able to help businesses get up and running and grow, and then eventually back to their referring lenders is the goal. We currently operate in multiple states. So even though we're home based in Montana and we have offices here in Missoula and Bozeman, we also have an office in Boise and Salt Lake. And so this is kind of our coverage area, and we lend throughout any of these states. And so we often have lenders that maybe lend across borders and cover all of these, and most recently a bit in Nevada. And so Nevada's not on here, but we're looking at doing some small business lending there as well. Thought I'd just run through kind of high level what we offer. So primarily what we're focused on is business lending. And the space that we serve borrowers is in that we call it nearly bankable. So for whatever reason, there's something preventing them from getting the financing they need traditionally. We can come in and see what that looks like if we can qualify them here and then provide a product that fits the needs for that business. We'll also then work with them to get them back to the bank when the time is right. That is the bulk of what we do, but we do also participate in new markets tax credit programs. That is a little outside of my scope. I know the high level details, but it's larger projects. There's a few ways that they can qualify, and basically we work with a bank partner who purchases the tax credits that we get allocated, and then we work on the project together. And they're typically really cool projects that require a subsidy to move forward and provide just a tremendous community benefit, whether it's employment opportunities or just a service for that community that they didn't already have. Um, so pretty large projects kind of scattered throughout where we serve. And we have someone here that pretty much runs that program um, for us. So I focus a little more on the small business side, but it is something we do. And then for the state of Montana only, we do have a down payment assistance program for home buyers. And I'll just run through a little bit more about that down the road. Um, I'll just pause really quick to see any questions about kind of who we are, where we fit in, or where we operate.
There's been one question come in so far.
Sure.
And you may be going to get to it later, but I'll ask it anyways. Does your typical customer come directly to you, or does a lender that is unable to finance them sort of refer that customer to you?
Yes, great question. So we part of our business model and how we operate is that we want to help the people that are nearly bankable. And so we get most of our referrals from bankers, but also community partners. We do often hear from folks in SBDC offices across where we serve who know that their person they've been working with and counseling isn't eligible to get financing at the bank, so they might just send them over to us. We don't typically have people find us outside of those two referring resources from banks and community partners, but every now and then someone might find us through a web search. We're always just going to ask that question that if they look like they are eligible to get financing at a bank, we're going to send them that route. It's typically more affordable for the business as we do have higher rates than the bank. And there's also a lot that banks can offer that we can't. We can only offer debt. And so we know long term that's the goal for the relationship is having access to all those other services that banks can provide.
All right, thank you.
Yeah. Anything else before we move on? Great. I'll just keep rolling here. One thing when I was kind of looking through this topic, I thought it'd be helpful to just run through what we consider barriers for traditional financing and things that we are trying to solve for when businesses are referred to us. So that I could just run through some of these and how they get referred and how we kind of manage that client relationship. And then we'll dive into some specifics about products that we have available. So one reason we see businesses or business owners wanting to start a business get sent our way is just the time and business requirements that a lot of banks and credit unions have, which I think you probably all know. It's 2 years, typically, that's pretty common. They want to see 2 years of operation, 2 years of business taxes, and then can evaluate from there if it's a good fit with that organization. So true startups that haven't even opened the doors yet are often sent our way just because we are comfortable underwriting to projections and don't have a time and business requirement for any of our products. Um, so that is one big reason, and it's kind of the easiest one we think to solve for is we can usually put someone on a bankability plan with a target date for refinancing with their referring lender. And typically that's within 2 years is our goal, sometimes two up to 3, just depending. There are scenarios where we hold that for less. It just depends, it's case by case. But time in business is something that usually flows a lot of business our way, just because there are restrictions traditionally. Another reason we see folks coming in is I think as you review financials a lot with borrowers that there's showing profitability or taking advantage of certain tax write-offs, incentives, ways that you manage how you file your taxes as a business versus showing profit in the business. And I think we're often in a place where we're educating borrowers through SBDC community partners and also here that banks are going to want to see the profitability numbers in the business, showing that there's cash flow there, that they have ability to service any debt that they're taking out. And so while we don't advise like what's best for a business and we refer you to your accountants, we also know that that's something that can hinder their ability to get traditional financing, and one reason why they might end up coming to Mofi for financing opportunities until maybe they change that the way that's structured and get into a better profitability space for a bank to look at it moving forward. So that comes up from time to time. We also can see folks who maybe don't have record keeping in place the way the bank might want to see it. And so we might take them on and try to work and help them get into a system where they can track that. They know the types of statements the bank will be wanting to look at and just a general understanding of what that means. I think we often see so many business owners with awesome ideas, but they've never had to start or run a business. And so there's so many opportunities for education on kind of the building blocks of what that looks like to become bankable. And so that's one way we can kind of pitch in to help while they're borrowers to make sure that they have those, they know how to access them, and kind of what the bank needs to see and why. Any questions so far about kind of reasons we end up getting referrals?
This isn't a question, Alyssa, but
Yeah.
I just want to say from the SBDC standpoint, these are all spot on and things that challenges we see every day with new business. It's really great that there's a lender out there that can help with, especially that time and business requirement.
Yeah, I agree. And we hear frustration sometimes from business owners being like, if we wouldn't have found you, how do people, get started? And so I think it's nice that, we're here and can make those flexible choices around requirements, and that we also have a lot of local development organizations throughout the state of Montana in particular who have programs and also can help folks in these scenarios, especially time in business. Great. Thank you, Jen. Some other pieces just to kind of run through. I think hopefully you'll agree, you guys see this as well, but credit qualification can be a big factor in access to traditional financing. Sometimes there's a certain number that lenders want to see. Sometimes it's just more they look at the total history and the profile, which is what we do. So we can help folks that sometimes just don't have enough built up credit or maybe just need a little coaching on how to utilize credit to increase their score and be more in a bankable position for borrowing traditionally. So we have some credit-driven products, but we have some space under where we see most lenders fall. And again, like to look at the whole picture, not just the number. Another nice thing for us is that we soft pull credit, which means we're not hard hitting anyone's credit and there's never a negative impact to us taking a look at a request. And so I think usually when folks end up with us, they've already tried a few other resources. And I think that's always a big hesitation, is wanting to maintain their credit, and that if they get those hard hits repeatedly, it pulls their credit down. So I think also there's certain credit qualifications for lenders traditionally that may deter financing opportunities, like previous bankruptcies and settled or charged off debt. And there may be those things in a credit background that prevent us from moving forward. And when that does come up, we always like to give the reason for that, and also the steps to how to do that credit improvement to be in a better position. And so even in times when we can't help, we're trying to offer a little bit of education and next steps to help better prepare them for the next opportunity to try to seek financing. So that's a big one. I think we see quite a bit. Also, where you guys come in, and we actually rely heavily on you as a resource throughout our territories, is that early stage business planning. And we don't currently have anything on staff available where we can dig into these very first steps. So we're often referring them out to SBDC offices. If they're available, if they're not, if there's any other resource in the community like SCORE or someone that can help, where do you start with a plan, how to create projections if you're a brand new business, what those mean and why they're important for requesting financing. And so when someone comes to us with an initial plan and maybe some projections, we might be able to sit down and help build those out or stress test them. But it's nice to always have a starting point. And so if we have folks that come in and don't have anything in place, we might be sending them out to you all for some early stage planning and counseling. And then with the hope they come back when that's completed and we're able to jump in. But that is always super helpful. We do have some express type products where we may not need as much of that, or it may not need to be an extensive plan. So I think anytime we're not sure, we have lenders just send them our way so we can evaluate and then take the next steps, depending on what those look like. Two other, I think, big ones that come up are gaps in collateral and collateral support for a loan request. We also look for collateral. I think there's a lot of times folks are interested in 100% financing, and it's not often available. I would say we do have more flexibility here in ways of how much and what types of collateral we can use. And then we also have a collateral support program through the SBA that we're able to use as a CDFI. And so we may have some folks that get referred over where there's some gaps there to support their request at the bank, but there might be something we can do and find some creative solutions to make the project move forward. So that is definitely a big one that comes up. And also a lack of equity. So a lot of banks and credit unions will require a certain percentage down for a project. So they want a down payment. So usually they'll ask borrowers to come in with, I would say the average I see most often is 20% of a project, but it may vary based on what they need the funds for. We do not have an equity requirement. And so we see a lot of referred businesses who just don't have the cash available to put down, but everything else looks great. They have cash flow in their business. They're able to service the debt payment. They just don't have that amount to put down. And so in that case, it does look like we're doing that 100% financing, but we'll likely look at opportunities to secure that financing with assets in the business and then sometimes personal assets. But we don't have that same percentage requirement that a lot of traditional resources do. And so we may get the entire referral over here. We may also partner with a lender and provide part of the equity gap. So if the borrower has 10% and the bank wants 20, we might be able to fill that gap and finance at 10% and work kind of in partnership with the bank to make that project a success. Just stop there really quick. Any questions about any of these other reasons we see businesses sent our way and or how we try to solve for those? Great. Again, feel free to like pop in if anything comes up that you want to ask or chat some more about. I'll just kind of pop over to talking a little bit more about our loan products. So the goal for us is to provide flexible, I think you've heard me say that a few times already, flexible, responsible loans for borrowers. So for startup businesses, existing businesses, business purchases, bank partnerships, we do a lot in there. You heard me talk about that. Gap financing. We typically put folks on either a term loan or a line of credit based on what the business needs. And again, can often be a little more flexible in how we structure those, which sometimes also makes it a good fit here and nowhere else. And so one way that we are able to get folks into that flexible, responsible capital, and then also work with them to get them bankable, is that we don't have a prepayment penalty on any product. So as soon as that business or borrower is in a good place to get refinanced with the bank, we're working with that lender to make sure we have everything, kind of all of their benchmarks taken care of. We help prepare the financials, help them with their application and get that refinanced at the bank. Typically, they're getting into a slightly lower interest rate, and then again, just supporting that long-term relationship that we know the businesses need because of other opportunities there. Any questions about kind of high-level loan products? I'm going to dive into the details here in 1 second. Okay, just really quickly along the lines of that prepayment penalty, we do see that a lot with other traditional and maybe even non-traditional, but potentially predatory resources, is that there's a prepayment penalty. So even if they get the financing they need, there's not a way to kind of get out of that for a certain amount of time or for the life of the loan. But for us, that's not important. We want to help move them on to that next step. And so we come up with a plan, again, to help support whatever was preventing that business from getting financing and put a plan in place to help them along the way. Like those barriers that we talked about, it could be an improvement in credit score, better management of financial statements or getting organized in that way, helping to look at opportunities to increase their profitability, and maybe get them to those debt service requirements that their bank needs, and can also help them establish a bank relationship if they don't have one already with a commercial lender. Again, we try to do this within 2 years, and sometimes we accomplish that sooner and sometimes takes a bit longer. But that's always the goal. We don't want to hold the debt long term. We want to help them get bankable and move on to the next steps for their business. Oh, you know what? Before we do this, let me just go back one more here. We have a few different products available right now. I didn't put all the details in there, but I'll just kind of run through high level. We have kind of a range of where we can offer loans. We say starting at $1,000. We don't typically see them under 5, but we can go up to 1.5 million. So there's a lot of different types of businesses that might come through. Like you see, we've talked about startups, existing businesses, opportunities to partner with a lender, business acquisitions. And then what we do is just kind of run through initial eligibility, and we figure out what product we have available that we think might be the best fit. And then kind of our underwriters take it from there and work out the best proposed financing and structure that we can offer that borrower. So we can look at term loans. Most of the time, those term loans depend on what they're using the funds for, and we try to structure always for cash flow in the business. So making sure the business can support that debt request. And we'll look at a revolving line of credit if that seems like it's the best fit. We do have some opportunities that really it's up to that 50,000 that can move in an express lane. We those can just turn around a little quicker because we have certain requirements about debt to income and things that may or may not be on a credit background report. And so we have this kind of one big eligibility bucket and then try to decide what we think is the best fit based on what the needs are as that comes through. And so really wide range of opportunities there for businesses. And, typically we just run through those first couple of eligibility steps and then figure out a plan and then kind of move forward into requesting documents at that point. I think it's also helpful to know, I didn't have this on my slides before, but we always gather things like personal taxes. And so one thing to be thinking about for maybe new business owners is we're going to be asking for personal taxes. We're going to ask for information about personal expenses, household expenses, and income. And so as you're preparing, I think that's always nice to think about what you might need to put together to get that request up and running. Also, we work with borrowers step by step, making sure they have a list of what we need. But that's kind of big picture where everything goes with us. And then we just try to determine what the best fit is. And so it could either be something that moves quickly but has certain requirements, or it's just a normal underwriting request and it runs through our lending team. But we'll always have someone who's the first point of contact for them and helps them through that process. Any questions about just what we can offer or how we can support small businesses when they don't have this traditional access? I'm going to jump ahead here to our other product that we chatted about briefly earlier. So we just in Montana have a program called Home Now. I always just think it's nice to mention that it's available. We work directly with participating mortgage lenders, and it's basically a program that offers some down payment assistance to home buyers that don't have enough cash saved up to, maybe put in the traditional amount for a mortgage loan request. And so this program can offer up to 5% down payment. It is completely qualified through the mortgage lender. So we offer the financial support for the down payment assistance, but the mortgage lender processes everything, qualifies them for the mortgage, qualifies them for this program. And really it is a credit score driven program. We require 640 and up for this. And basically it just needs to be someone who is purchasing a residence. It doesn't have to be a first-time home buyer, but it does have to be your primary residence that has, steady underwritable income, can pay the mortgage payment, but just is a little light on that down payment requirement. So anyone ever interested, we do have a link on our website, and there's a little lookup tool where if you're looking to buy in a certain town, you can see what lenders, mortgage lenders in the area participate. And then as long as you're working with one of them, they can qualify and see if this is a good fit. And then we just kind of show up when everything's ready to close. So kind of a nice program. I'd love to offer it in all states, but right now we just have it available in Montana for folks looking to buy homes in Montana. But always nice to know it's there. Feel free to share with anyone who might be interested in this program. I'm always happy to run through questions or help make a connection to a lender if that comes up. Okay, that was really everything I had. I am happy to just dive into some more details on anything that stood out to anyone here or open it up for questions. Ever you
Do
guys
you have
would
a
like.
question to get us started?
Yeah, I was wondering, Alyssa, if you could repeat what you said was the minimum loan amount that
Yeah.
MoFi can offer.
Yeah, we have always been asked about a floor. We don't typically see loan requests under 5,000, but we have on our range 1,000 to 1.5 million.
I thought that's what you said, and that
Yeah.
is really an opportunity for someone that just needs a little bit, or like you're getting started with your, minimum viable product, maybe at the farmer's market or something, because um, that's, I think banks won't touch that level of loan, like it's too small. So thanks for
Yeah.
clarifying that.
Yeah, and you're right. There usually is a minimum requirement for business requests in particular. There are opportunities sometimes for folks to get into credit cards, revolving credit cards that maybe have a low interest rate, but nice to know there's another option too if they can't get that. Yep, absolutely. What else? Anything else about how referrals end up with us or anything else I can share about our products?
Let's see, I think you're on mute here, Maggie. Let me see if I can get you unmuted. Should be good now. Let's give that a try. We're still not hearing you.
Shoot.
Let's see. And one thing too, if you can type it into the chat window, we'd be
Yeah.
happy to relay it on that way as well. Or even if you want to send me an email, that would work too.
Awesome. Well, maybe that's, oh, here we go.
All right, here we go. What indexes do you work with and how do your rates compare to banks?
Yeah. So we work in a space, what we always want is, so we don't ever want to be a competitive um, lender with a bank. That's definitely not our goal or intention. We want to support the lenders in getting the businesses they want to work with the help when they can't. And so we are always talking to lenders and making sure, as rates have been rising over the last couple of years, that we're always going to be in a rate space above where banks are. So we don't ever look at, we're basing our rates on this many points over prime or anything like that. We really do just talk to all of our lending partners across territories and make sure we're in a rate space above where they can lend. For a couple of reasons, we don't want to be competitive. And then at the same time, we also want to incentivize borrowers to get refinanced when the time is right. And part of that is getting that reduction of interest rate. Is that helpful? Does that answer your question? Great. Awesome. What else? Any other questions?
And thank you for that question and working through our audio challenges there.
Yeah.
Other questions for Alyssa?
You're also welcome to share my contact info. I think sometimes questions come up later or when something pops up and you're like, oh, this would have been an interesting question to chat about. Feel free to email or call me. I'm happy to be available after this to just chat about anything that comes up or answer more specific questions. I can share my contact info with Jen or Joel. Well, you guys have it, so feel free to share. I think there was also a slide that had all my contact info on it too, so pretty easy to track that down.
Well, Alyssa, I want to thank you very much for sharing your expertise and a little more where Mofi can help small businesses. Before we sign off, I'll give one more chance here to everybody. Is there any questions that you all would like to ask Alyssa? Alyssa, are there any final comments you want to make?
No, I would just say thanks again for having me. I always love diving in and working with our community partners. There's a lot of things we are always trying to do to help small business, and part of that is being able to work with SBDC partners across all the states we're in. And I just appreciate the service and education those community partners provide, and I hope we can continue to be resource partners for one another. So thanks for having me.
All right. Well, thank you again, Alyssa. And for those of you that are on, please mark September 7th at 11 will be our next edition of our monthly small business webinar series. And again, we will be talking about OSHA requirements for small businesses next week. So enjoy your day, everyone, and I hope to see you in September.
Thanks.